Hi, good morning, everybody. This is Larry Bsharah, president of John Adams Mortgage, bringing you Michigan Mortgage Cast, a program that's going to talk about real estate market, mortgage market, and everything in between. This is our first episode, so we're excited to bring it to you live, brought to you by John Adams Mortgage. My guest today is none other than Dan Elsea, president of Real Estate One Brokerage. Welcome, Dan.
Yeah, great. Good to be here, Larry.
Thank you. So we want to talk about what's happening in the market, different segments, buyer demand, seller demand, prices, a little bit of interest rates and mortgage programs. So first, the first thing we want to talk about is the four different markets broken down by segment: Southeast, Northern region, Washtenaw, and Southwest. So if you want to talk about year to date, through June prices and units, Dan?
Sure. So these are little snapshots that really reflect most of Michigan as well. But what you can see in this year to date, it's not surprising that number of home sales are down dramatically across all markets, considering that the executive order prevented realtors from showing homes through all of April, section of May, and about half of March. So what really you can take away from this is that we're surprised sales aren't down more. To have really practical from a number of home sales written, contracts written, to be only off 20% in Washtenaw, and 18 in Southeast, and 21 in Northern Michigan, et cetera, and 17 in Southwest. It's pretty amazing how resilient the market was even during the shutdown, how many homes were being shown virtually, and the values really reflect transactions that were written pre-COVID. So you can see prior to COVID, values were rising across all markets, and they were rising in Washtenaw too. That's really a reflection. It shows negative. It's a reflection of the mix of business shifting more toward middle market than upper market, where the average sale price is lower. But across the board, we were going into the COVID market, the really strong real estate market, and we're coming out of it pretty strong as well.
Yeah, and the thing that I wanted to point out on this one too, from the mortgage side, is even though prices are rising, which is great if you're a seller for sure, but with low interest rates, that's going to help with your buying power. So even though markets are rising and prices are rising, your payment might not change that much with the lower rates. So that's always a plus when you can have more buying power out there. And then Dan, you touched on lower inventory. So for the next thing is home sale expectations. You know, you can see the year started off beautifully, and then of course we had the drop in the market. So if you could tell us where we're at now and where we expect to go.
So this was our projection of what we thought the market would look like coming out of the recovery. And it turns out, luckily, by grand intelligence or by guessing, we were right. So the market did start off pretty strong. It did have a significant drop, as we said, in March, April, and May. And then we had a buyer bounce, which is all that pent-up demand and all that activity that couldn't happen for 60 days that got released. So we're in the middle of that bounce now, where we have buyer demand significantly exceeding supply, really across most every price point. More concentrated in the lower price point ranges, but even in the upper end, we still have that. And then at some point, we anticipate, and maybe in the fall, as early as the fall, sort of a listing bounce where we'll see some more listings coming back into the market to relieve some of that supply pressure. And then from there, the recovery. You can see in our chart, we sort of guess which direction the recovery will be, and it really depends on the overall economy and strength. But we don't anticipate home sales to get back to the same pace as they were in 2019 till probably the end of 2021. But for home sellers and buyers, that's not, number of home sales isn't necessarily as relevant as are there homes available to buy. And right now we're at record low inventories with that regard.
Do you anticipate, with more inventory coming on the market, that prices will start to level off?
Yeah, I think the acceleration of prices will level off. I think that prices will still rise, and one of the unusual things is people expect during a recession that home values drop, And in fact, they rarely do. And in this case, we don't expect a home sale drop. We just don't expect it to rise as fast as it's been going in the last 60, 90 days. It'll settle a little bit.
And then you touched on showings. So we can see that showings right now are far exceeding 2019, and a little bit of a decline right now, but back to your point earlier, lower inventory is creating higher demand. And we're going to touch on in a few minutes multiple offers and how to win those multiple offers. So again, everybody can see here that showings are still strong as compared to last year.
There were actually showings were ahead of last year, and we use the number of homes people are being shown as a leading indicator for sales. There are more people looking at houses. They anticipate more sales. In pre-COVID shutdown, actually, they were ahead of last year. Then, of course, the idea with this visual is to show just how quickly the showings dropped to zero, basically, for that time period.
Yeah.
But they've recovered. And part of that is that even though we had zero showings, we didn't have zero people that wanted to see properties. So the dam sort of broke May 7th, and therefore we've seen showings kick even farther ahead of last year, which is a little bit strange because we don't have as many homes to show. So we have more buyers chasing fewer listings. So if you are a buyer in the market right now, it's pretty wild. In certain markets and price ranges, there are cars lined up in front of houses waiting to get in to see them.
Yeah, it's not uncommon that our loan officers are doing pre-approvals for two different buyers going after the same home.
House. I hadn't thought about that, but that's true. That probably would happen quite often. Yeah.
Yeah. So inventory right now, we talked about it. So just quickly on this slide, as you can see, the decline of inventory percentage-wise this year over last.
The inventories are probably as low as I've seen in my time in the business. So again, if you're a buyer, and we'll talk about how to handle that, the number of multiple offers are probably at record levels right now. And that's concentrated in mainly the under 250,000 to maybe under $400,000 market. It takes a strategy when you're buying a home right now in the marketplace.
Yeah, no doubt. So for the year over year change, this chart really interests me, I guess. As you can hear Rudy in the background there. This one interests me because you're seeing different markets or different buckets, 250 to 500, 500 up, under 250 in Detroit, where you have the two different. Is it common for the two different market segments to go in kind of opposite ways like it is?
Well, what's interesting about this is that for the most part, all price points for inventory this shows that everything is declining. So the number of homes for sale has been declining, and it was declining pre-COVID. And then you can see that the good news is that it's recovered. So the people that wanted to sell but couldn't put their home on the market during the COVID shutdown are. So we had a rush. But it is interesting. We put the city of Detroit specifically in there, that gray line, because city of Detroit is acting stronger than the rest of the market. If you break out, and other markets are also, there are always markets that are doing better and doing worse, but it's just interesting to note the city of Detroit is doing better. And it's because of affordability. And going into COVID, their inventories were actually rising. So access to inventory, you can see a little gray area there that it was actually rising through September and the end of last year. So there were more homes to buy and more affordable homes. So it attracted attention. Yeah,
and the city of Detroit, you have first-time home buyer price range all the way up. And the great thing is no matter where you're buying, the different programs that we have to offer too, whether it's a MISHDA, the state bond program, or all the way up to the jumbo size, we have, no matter what the market is, mid-Michigan, we have programs for all of that, the different price points for sure. Dan, if you could briefly touch on why we're having the inventory shortage, what your thoughts are, and it's kind of a different dynamic for sure.
Yeah, it is. And there's demographic reasons. The millennial buyer group, Gen X, Gen Y, it's a huge number of people. So you have basically more people looking to get their first home or into homes than you have the bigger than the boomer generation. So you have more buyers and sellers. So that causes more demand, but also the boomers aren't moving as much as they used to. So the average home ownership or stay in a home now is 10 years versus 7 about 10 years ago. So boomers they're working longer, they're staying in their home longer. Since prices have risen, they find that the home that they're going to sort of downsize to doesn't really cost any less. Sometimes it costs more, and taxes be uncapped. So you just don't have as much incentive for boomers to move. So they're staying put, and it's keeping inventories tight. Also, with interest rates as low as they were coming out of the prior recession, a lot of buyers that had 3% interest rates. Now, with lower rates now, we might get a burst. That's that listing bounce we might see with this interest rates now at record levels, that some of those buyer or the sellers who are reluctant to move because they had such great interest rates, they might now move. So there's a chance that we will get that boomerang back again, and a mini boom of listings coming soon from that.
Yeah, no longer can the mortgage industry guarantee that rates are at all-time lows, because we just hit that again not too long ago. So
yeah.
Again, I really want to get to the multiple offer situation. Yeah. So we're going to jump ahead to a slide that shows the different segments of areas for multiple offers, and this right here shows that even though inventory is way down, pendings aren't down nearly as much, because it's the homes are selling rather quickly, and multiple offers.
Yeah, so the pendings the number of homes, contracts written on homes have jumped quite a bit since we've been able to show properties, and we expect July and August to do the same. But then going forward, we do expect sales to settle back down a little bit towards whatever level the economy is working at, which will still not going to be terrible, but it might be as much as 10% off of last year, maybe better. That's probably worst case, but still pretty steady.
And Dan, and from your managing multiple offers, how whether you're a realtor, a buyer, seller, what's the best way to manage those multiple offer situations to help realtors and buyers win offers and sellers kind of accept that best offer?
Mm-hmm. Well, start from the seller side of things. Here we go. Here's the list. So from the seller side of things, first of all, the market's strong enough that as a seller, if you're not getting an offer at least in the first 10 days or multiple offers, then you want to talk to your realtor and look at pricing. 80% of the time, it's a pricing issue. Sometimes it's the home condition and where it is and location and all, but make an adjustment. But also decide, if you've got multiple offers, make sure you decide on what is important to you as the seller. Make sure that you focus on the offer that will close. What you'll find on occasion is buyers will bid, and they'll overbid just to beat the other offers, but they aren't necessarily a great offer. The buyer might not be as well qualified as they could be, but they look good because they're giving a sort of a crazy offer or a really high offer. So your realtor can work with you on that and make sure that they talk with the agent representing the buyer, make sure that there's good information there. And it is okay to create a bidding war. Just be cautious about that. We have lots and lots of examples where sellers got bidding war drunk on it and all buyers walked away. They got mad. So you can play one against the other, and it works, and it is an effective tool. But again, your realtor can guide you based on the market and what's typical, how many offers are being created in that market. On the buy side, which is the part where you get the most frustration, buyers, because for a buyer right now, there's about between a 60 and a 70% chance the offer that you make will have other offers you're competing against. So you're going to see it a lot. So the first is cash is king, certainly. You can figure out how to do a cash offer. That's great. The next best thing is a near cash, which is getting fully approved and underwritten. I guess we call that good to go, don't we, in John terms?
Yeah,
our product. But you want to have a fully underwritten. So the only thing that's left to do is to identify the home and get an appraisal. Anything less than that, and you're not very competitive in your offer. Values also are not crazy yet, so I wouldn't panic too much about making a 275 offer on a 265 or 268 property. The values have just really only recently gotten back to where they were prior to the last recession. So it's not crazy to do that. And from buyers, look at considering an appraisal, if not a waiver, at least a If the appraiser comes in a little bit low, you'll pay X amount more than that, and or price escalation that you'll pay X amount more than the other best offers. And again, realtors are well versed at writing those contracts, but it puts you in a position to at least move up. What you want to do is move up the list. And one subtle thing is make sure you understand the seller's priorities. It may be that having free occupancy or extended occupancy is way more important than price because of where they've got the dominoes in the next house they're going to, et cetera. Or there may be some issues with the home. I would be careful as a buyer nickel and diming a seller on inspection issues, small $200 or $300 issues. Let those go, particularly if you know there's offers behind you. And that's easy to walk away from.
And I think it's really important for all the realtors out there. Don't be afraid to call the lenders on the pre-approvals.
Yeah.
Get a good gut feeling of the strength of the buyer. That could help you if the appraisal comes in low or if there's an issue throughout the transaction. Don't be afraid to call and get a really good feel and drill us with questions. Whoever the lender is, drill us with questions and make sure you feel comfortable guiding your seller to accept that offer.
Yeah, that's probably the most important advice actually is from if you're representing the sellers, understand each of those buyers. So it's a good idea.
So in closing, we talked about a lot today. And from the John Adams Mortgage side, we have programs for all different price points, all different types of buyers, whether you're putting 3% down, 20% down, Jumbo is at 10% down with no mortgage insurance. But there's a couple incentives that we have going on right now. We're giving a $500 lender credit for first responders and healthcare heroes, critical, especially now. So we feel very strongly about that. So we want to show our appreciation. MSHA loans don't qualify only because they're structured a little bit differently, where you have to have a minimum down payment of 1% or minimum investment of 1%. So they're structured a little bit differently. So credits don't help in that situation. They're great to begin with. And the other thing we wanted to talk about, and certainly email us at mortgages@johnadamsmortgage.com to find out more, how you can qualify for a $1,000 lender credit. There's a couple different ways we can go about that. So if you want, please inquire with us at mortgages@johnadamsmortgage.com to do that. Dan, I can't thank you enough. I know you're super busy right now and really want to thank you for joining me and us today and bringing some knowledge to all our viewers.
Thanks, Larry. It's enjoyable. Thanks.
You got it. Thank you very much. And join us next time. In 1 month from now, we're going to have a loan officer and realtor panel to again discuss the market and really drill down a little bit more on buyer and seller needs. Thank you, everybody. Have a great day.
Thanks.